Good evening, folks, and thank you for joining us. It is about 5 past the hour. We are going to go ahead and get things underway. We appreciate everyone joining us this evening. Obviously, we know that it's pretty hot out there for most of the country right now. So, wherever you're coming to us tonight, we appreciate you spending time with us. Hopefully, you're able to get some information out of the session that you're about to watch, and certainly we encourage participation. If you do have questions, please use the Q&A feature on the menu section of the webinar to submit your questions. We have several professionals with us this evening who I will introduce shortly. They may be able to answer your questions in real time. Otherwise, we will have a portion of the program at the end of the show that is dedicated for Q&A. So with that, I would like to formally welcome you to our second annual LGBTQ plus first time homebuyer seminar. It is my pleasure to be with you this afternoon or this evening, depending on where you are. My name is Ryan Wyant. I am the proud CEO of the LGBTQ Plus Real Estate Alliance. And before we get too deep into the program, I want to just take a moment to acknowledge our phenomenal sponsors that made this event possible this year during Pride. Thank you to Realogy, which, as most of you know, their portfolio of companies include Better Homes and Gardens, Century 21, Coldwell Banker Commercial, Corcoran, ERA, and Sotheby's, and our friends at Prime Lending, who have also come in as title sponsors for our Pride Month programming. We appreciate and would not be able to do programming like this without the support and partnership from our sponsors. As I said, my name is Ryan Wyant. I am the CEO of this organization, and this evening I'm very happy to have some phenomenal professionals and members of the Alliance with us presenting content alongside me. Bill Hoyt, who comes out of Dallas, Texas, senior loan officer with Prime Lending, is with us and will guide us through the mortgage process. Give us some basics that first-time home buyers, or really anyone that's looking at financing a home, should be acquainted with. We have Ann Ness with Enact Mortgage Insurance, a pivotal part of the mortgage process that's often ignored. Ann also hails from the Twin Cities along with myself. And we have Juan Sanchez, broker and owner of Century 21 Fairfax Realty in Denver, Colorado. Juan is going to be taking us through the real estate process and what it looks like from an actual transaction perspective if you're working with a realtor or a real estate agent, which we do highly encourage. Before we jump into the program itself and talk about how to get into home ownership, I want to just introduce the Alliance a little bit. The Alliance was founded in June, about 2 years ago actually, of 2020, and we are now about 2,400 members strong. We have a presence in the United States, including Puerto Rico, Alaska, and Hawaii, as well as a presence in Canada, which we're very proud of. We're made up of a variety of different professions in the real estate industry, and we cater to both our members in the industry and the consumers that are looking to work with our professionals. We're focused on advocacy and education, as well as philanthropy, and making sure that our members are available to folks like you who are looking to buy, sell, or convey real estate. We're also working on getting into the rental and the commercial spaces as well. So if you have questions about either of those, this definitely could be an opportunity for you to get some of those questions answered as well. But we will be primarily focused on the residential real estate portion of purchasing this evening. Our mission at the Alliance is simple. We're here to cater to our community, to ensure that we're talking about allyship in the community, and really to make sure that that home ownership rate that we currently have of 49.8% only rises over the next several years. And we're going to do everything we can to make sure that that's possible. We're here this evening to help you connect with a professional at the Alliance. And we'll talk about that a little bit further as to how you're able to use the resources that we provide. But the goal here is to help educate our community members about the home buying and mortgage processes. I would say that at any point in time, if you'd like to go to our website at www.realestatealliance.org, you're more than welcome to. And through that portal, you are able to interact with our professionals. It is local to your geography, so I definitely encourage you to click on the little green box on our homepage that is built for our consumers, such as yourself, and then check out our consumer landing page. It's pretty self-explanatory. Once you're there, you're able, as I said, to connect with our members who are made up of LGBTQ plus and allied real estate professionals. I believe we have 28 different professions that we represent at the Alliance, and as you'll see over the next few minutes, having someone from within our community to help guide you through this process is very important. We like to think that the Alliance provides the footing for professionals who are part of our community and allied, who understand the added challenges and concerns that folks in the LGBTQ plus community could potentially face in the transactional process. So it's our mission to make sure that we're helping you successfully navigate the process and providing you with the proper resources you'll need to really choose a home and make sure that you're successfully able to get into it and enjoy home ownership. I want to talk a little bit now about the state of the current housing market, because anyone that's had the news on knows that there's a lot going on. And as many of us know, even before the pandemic started, the number of homes was slowly decreasing. Now, just like supply and demand in any kind of commodity, the pandemic only made things worse. And with so many folks looking to leave urban settings, maybe that 600 square foot apartment that we found ourselves stuck in during the pandemic wasn't really all it cracked up to be after we weren't able to leave for extended periods of time. Folks are taking advantage of we're taking advantage of record low mortgage rates and really moving out of urban areas. And homes that were coming on the market were selling as quick as they could be listed. The demand for homes, in fact, was at historic highs for most of the country, while unfortunately supply continued to drop dramatically. In fact, only a few months ago, we hit an all-time low of homes available for purchase in the United States. The National Association of Realtors reported that across the United States, nearly 80% of all homes that were listed were selling in at least 30 days or less. So unfortunately, the inventory hasn't been great, and it is a challenging time to think about home ownership if this is the first time you've thought to get into a new home. The supply and demand imbalance unfortunately did lead to a lot of competition, and what we're seeing right now is a market that's full of bidding wars, cash purchases perhaps, at very aggressive pricing. And you guessed it, because of that, because of supply and demand, like we're seeing at the pumps, rising home prices in almost every town, region, and state across the country are a reality right now. Now, I certainly don't have a crystal ball, and I'm not an economist, but after spending a long time in the industry, I think it's pretty safe to make some assumptions about what we're looking at. And with mortgage rates rising now, some, depending on how you qualify and what products you're looking at, in the 5 to 6% ranges, and Bill will talk more about that. With that coupled along with the already high home prices, it may put potential buyers just out of the market. It could turn people off, and it could price people out of becoming homeowners. So if that were to occur and does occur, homes would stay on the market for longer. There would be fewer multiple offers on homes, and the supply of homes would actually start to increase, which would be a good thing potentially for the price of homes. This would allow prices to potentially stabilize across the country and stop the incredible and, I think, unreasonable price increases that have occurred throughout the industry. And I think the most important thing that I could probably leave you with here is don't panic. The sky isn't falling. And for folks who want to be homeowners, I genuinely and sincerely believe that you still have an opportunity to do so. Remember, last year there were more than 6 million homes sold in the United States. It was one of the most active years ever, and in many respects, many economists believe that the real estate industry held up the American economy during the pandemic. This year, many are calling for that number to be a little lower based on market conditions, but you can purchase a home, and we're going to talk about what that looks like and how you can go down that path. Let's explore just a little background on the LGBTQ plus community. And I say that because I think it's imperative to understand that the LGBTQ plus community, though very comparable to society at large and the general American population, does have some nuances and unique opportunities and challenges that we face when we're talking about engaging in home ownership. As you can see from the slide up currently, the LGBTQ plus home ownership rate is 49.8% in America today. That is versus 65% of the general population who own homes, and cisgender Caucasian folks at 74% home ownership rates. So the LGBTQ plus community does have some work to do, and we have opportunity in front of us. The Alliance is working to fix that gap, and hopefully through educational opportunities like this today, provide you folks with information that you'll need when it comes to buying a home and really making an active impact in increasing that home ownership number. UCLA's Williams Institute brings us that number, and we specifically cite that because there's simply a lack of data collection when it comes to the LGBTQ population in America. So we're very grateful for private organizations and educational institutions like UCLA's Williams Institute. Now, Zillow last year reported something that we found not really shocking but surprising. 12% of all homes purchased last year were purchased by LGBTQ folks. And that statistic is up from 7% only 2 years ago. So the community is definitely going in the right direction, and home ownership will rise, I believe. Now, some history that many folks are already familiar with, but definitely deserves some attention. There are definite driving factors that are behind that, what we hope to be increasing home ownership rate within our community. A big momentum driver for the home ownership rate came almost 7 years ago during Pride Month, in fact, June 26th of 2015, where in a 5-4 vote in the Supreme Court, my dear friend Jim Obergefell won his Supreme Court case, which legalized same-sex marriage as law of the land in the United States. And folks, we have empirical data now to show that marriage equality has in fact helped the LGBTQ plus community achieve greater home ownership numbers. 73% of all married LGBTQ folks in America own homes, which is very comparable to 80% of the general population. 1 month after the Obergefell versus Hodges ruling, 90% of LGBTQ plus homeowners saw home ownership as a good investment. And 81% of our community who were non-homeowners at the time believed that the ruling would, in fact, make them feel more financially protected and confident through the process. And our members, who are professionals in, as I explained, many areas of the real estate industry, are seeing this play out in reality. Since the ruling, almost 64% of our LGBTQ plus Real Estate Alliance members have seen an uptick in the number of couples, LGBTQ couples, as homeowners. And 42% of our members have noticed an increase of single LGBTQ folks entering homeownership as well. So we're definitely moving in the right direction. Another interesting thing to note is that we're noticing that our populations are slowly shifting. We're no longer simply going to urban areas that are known as traditionally LGBTQ friendly neighborhoods. In fact, 40% of our members are recognizing that an increase in the homebuyer's choice to live elsewhere is predominant, and folks are moving into not traditionally LGBTQ known communities. This is a good thing, obviously, because it allows us more opportunity to expand our boundaries as a community. Now, if you take a look at these statistics really quick, and there's some interesting data here, it addresses the value of home ownership for our community. And as you can see, the LGBTQ plus renter population is very similar to that of the general population in the desire to own a home, 72 versus 75%. So we do see it as a good financial investment, which is encouraging, and home ownership is part of the American dream. In fact, I would say the American dream is home ownership. We all want the stability, safety, and security that shelter provides, and owning that shelter, having the ability to actually be in control of that, is really what it's all about, and we truly do believe that. Our friends at Freddie Mac have identified the top 4 reasons to owning a home are just like that of the general population. Now, it's not a shock, and a lot of us in the community understand that our wants and needs are very similar. But as you can see, no one wants to pay someone else's rent indefinitely, and home ownership is a great solution to solving that problem. As I cited earlier, we'd love to have the freedom and control over decorating and really dictating what to do with the space that we live in. We see it as a great financial investment in the future, and it is. And it provides some great stability for both you personally and your family. Now, we do face challenges, and I certainly don't want to paint a misconception of where we are today. There are some barriers ahead of us, and obvious concerns about home prices rising and the lack of inventory, a lack of down payment funds, and maybe a lack of short-term financial viability are all issues. But our members do feel and have shared that the largest barrier of home ownership entry for our community are both a lack of understanding about the process, because unfortunately, just like doing your taxes, most of this process is simply not taught in public education settings, and a lack of understanding about the mortgage process. And as someone who was in the mortgage industry for 10 years, I can tell you it changes regularly, and it can be very confusing to keep up with. We've got Bill here to talk to us about that today, and I'm excited that we have assembled such a great group of folks to be able to really engage and hopefully answer your questions. So the reality is that there is another barrier that we haven't talked about, and that barrier is discrimination, or the perception or fear of discrimination. And unfortunately, about 38% of our members have indicated that there have been no changes in the amount of discrimination against our community that homebuyers have seen over the last 3 years. In fact, 14% of the folks we surveyed indicated that it's actually increased instead of decreased. And I'd like to talk a little bit more about that briefly. And I say that because we know that discrimination is real. Many of us on this call have faced discrimination in various forms, and it's been substantiated through data. Freddie Mac reports that about 10% of our community have experienced blatant discrimination, but we also know that many people fear discrimination as well. Folks also fear potential consequences of reporting discrimination. So as much of a deterrent as facing discrimination is, the threat of facing discrimination is also very real and acts as a large deterrent as well. In fact, the top 3 culprits when it comes to enacting discrimination that have been reported were discrimination from agents themselves, real estate agents themselves, discrimination in legal forms and paperwork in the process, and discrimination from sellers selling their homes. Now, there are many ways that discrimination can play out, but as a consumer, we believe that some of the more prevalent ways that you could be subjected to, not always, and I'm not trying to paint a doom and gloom picture, but if you notice any of these, it's probably worth saying something or filing a report with the National Fair Housing Alliance or the U.S. Department of Housing and Urban Development. And if you're if you're finding that your agent is refusing to show you a certain area or a certain home on the market despite your request, that's probably a form of discrimination. If telling prospective buyers that a dwelling just isn't right for you or isn't right for your family, that's probably also a form of discrimination. Certainly if you're being lied to, or you feel like someone's exaggerating the sales terms in order to discourage you from purchasing a certain property or moving into a certain area, that would qualify as discrimination. Not informing prospective buyers about all of the available listings in their price range and their desired locations, it's not just discrimination. In fact, that's called redlining, folks, and that has a very ugly and long history. And just like other minority communities, the LGBTQ plus community is subjected to that even still today, regardless of redlining being illegal. If you feel like your agent or representation is using stall tactics or avoiding to show you certain homes, or even refusing to negotiate with you or talk about certain properties, that's definitely discrimination. There are many forms of discrimination that you can face out there. The baseline is if it doesn't feel right, it probably isn't. And it's not my line, it's TSA's line, but if you see something, say something. The more reported discrimination that comes into reporting agencies, the more accurate of a picture we have on what our community actually faces in the market today. So we certainly do encourage folks to report discrimination as they come across it. Why is that important? Well, there are 29 states today in America in 2022 where it is still legal to discriminate against LGBTQ folks in buying, selling, renting, financing, and the seeking of shelter. Now, we do have a temporary executive order that the president signed into law back in January, shortly after his inauguration of 2021. However, the individual states do not have protections in place. So be aware, be cognizant, and certainly don't be afraid to report discrimination as it occurs. The Equality Act would be a barrier to discrimination, and this is a piece of legislation, for those of you who aren't familiar with it, that has been floating around Congress since the 70s, actually. It's never had its day on the Senate floor. The president has pledged to sign this into law should it reach his desk. However, unfortunately, it looks like it's not going to make it out of committee onto the Senate floor for a vote in this Congress. It would be a huge step forward for the LGBTQ community, as it would create federally protected classes for gender identity and sexual orientation. Currently, those two fall under the class of sex as a protected class under the temporary executive order that I just explained. Now, you will be happy to know that there are many major players in the real estate and finance industries, including the National Association of Realtors and many of the sponsors of the Alliance, who publicly support the Equality Act and do have anti-discrimination policy in place internally as organizations. Now that we've gone through some of the background and hopefully you understand what the market looks like a little bit, what the Alliance is here for, and what we're up against as a community, I would like to invite my friend Bill to join us and talk about the actual home buying process and the financing process, because really that's where it all starts. Bill, are you with us?
I'm right here.
I'm going to turn it over to you, my friend.
Thank you very much, Ryan, for the opportunity to present with pride today. I love working with first-time home buyers because every time it reminds me of when I bought my first home. After closing, I thought I was Superman, but getting there, even being in the industry, was nerve-wracking. And the stress was not caused so much by the process as much as it was the excitement of not wanting to miss out on a home that I'd fallen in love with. So layer all that together, and it makes it a little nerve-wracking. But you know what? Buying a home is supposed to be fun and exciting, thrilling. So the thing is, it can be if you do things in the right order. And I think you'll understand more about this as I go through the steps of getting a loan. It's just like walking. It's one step at a time. I want to talk a little bit first about the team of people that are the players in your transaction. Just like anything, surrounding yourself with the best people, those who have your best interest at heart, is critical for a successful and enjoyable home buying process. And today, with the speed of the market, it's more important than ever. So I will attest that working with a realtor on the purchase of any home is the best decision anyone can make in buying or selling a property, but it's especially important for a first-time home buyer. And that is where most home buyers begin their process. They may do some research online, but when it comes to getting serious, most all want the one-on-one advice, face-to-face connection with the real estate agent and a loan officer. Your agent and your loan officer are your advocates and trusted advisors throughout the process. The agent will handle everything from learning your needs and desires, your location of interest, your commutes, the amenities in the home that you desire, and create searches for you. They'll also handle the contract preparations and negotiations. They'll be your captain to coordinate all the members of your team and guide you through a smooth closing. They are also an invaluable in the resources they have available at their fingertips, because when you're owning a home, you're going to have potentially lawn maintenance, construction, everything from house community. There's a whole list of things that you may not have had to have prior to. So just know that they're an incredible resource. Now, the very first thing the realtor will tell you is that you need to get pre-approved. And we're going to discuss in this next slide a little bit more about being approved. But they'll refer you a number of lenders for you to contact. The loan officer is your advocate for getting the loan approved, okay, and to assist you in selecting your loan product that's best for you. They also watch the details on their side of the transaction to keep you moving forward to ensure a timely closing. Now, the lender will hire an appraiser. The appraiser is a guy that goes out, or girl that goes out and determines the value of the home. They want to make certain that the house is worth what you are paying for it. And it is hired by the lender, but it'll be part of your closing cost at closing. Not to be confused with the appraiser is a home inspector. And most likely you'll also be advised to get a home inspection from your agent, and they should be a resource to provide you several reputable inspectors in your local market. Their job is to provide a buyer a visual inspection of the home structures, the mechanical systems, and the appliances, and so on and so on. Now, when the purchase contract is prepared, the title company is usually selected. The title company or the attorney's office issues a commitment that the seller is conveying clear title to you. There'll be more to follow on this later. And then in any transactions, there's legal documents. Legal documents such as the note, the mortgage deed, a deed of trust, deeds that transfer the title. These all have to be prepared by attorneys. The title company or attorney's office for the title company or lender will usually select these attorneys and then collect the closing fees from the buyer or seller at closing. Okay. One additional member of your team, it's pretty common, it's optional, but that is a home warranty company. And your agent should also have a list of home warranty companies in your local market that they like to work with, and that they warrant that the home, like if something breaks in the systems, the AC goes out, the stove goes out, that first year of home ownership, you don't want any surprises. So it's fantastic to have a home warranty policy if you can get one. So let's get on with some more terms before we can get to the fun part. Okay. Qualified, pre-approved, and approved. These are really important things to know in this marketplace right now, because sellers are wanting lender letters. And so let's take a moment to discuss what the differences are. Qualified means that you have spoken with the lender, and based on the information that you've given him or her, that they've told you a purchase price and a loan amount that you could be approved for. These are really not worth the time or effort, energy, or paper they're written on, because it's all hearsay. It's all based on what you've just told the lender. Now, pre-approved means that you've done all the steps to be qualified, but you've also provided them employment documentation, income documentation, your bank statements, and allowed them to pull your credit to review your credit and liabilities. So this is much stronger. And what they typically do will run these through the automated underwriting systems, which is a system that kind of determines the approval of the loan. But at the same time, there's one more step, and that a lender can do. And that is to provide you not a pre-approval, but an approval. And this is where the lender goes ahead and packages the loan. You do all the steps of being qualified. You've interviewed, you've been pre-approved, you've provided them all the documents. And this is where the loan has been packaged. Your loan officer has packaged that loan so that you can present it to the underwriter for the best outcome for you. And they say the loan is approved, you have clear to close, subject to you providing us an executed sales contract and an appraisal. And I'm telling you what, that's a strong lender letter when you have one of those. Now, the benefits of taking the time of getting an approval letter does several things. You will be searching for homes in your price range. You won't be wasting time looking at things that are too high or too low. If there's any items that need to be corrected, if you will do this far enough in advance, the sooner you begin to work on them, the better. Because sometimes people may have some things that need to be worked on their credit report, and those things take a little time, not necessarily something that can be fixed in 2 weeks or once you've found a property. Less stress. Consulting with your lender by the means of a virtual meeting over the phone or in person, the lender should be able to walk you through all the steps of the transaction, educating you about the process. Well, once you know that and your expectations are set, you can walk out of that meeting and within a day or so or 2 days, have an approval, or in some cases, you may be able to get one instantly. That whole layer of stress just comes off your back. So getting your pre-approval done up front in advance of even starting your home search is one of the best things that I could advise. And then they'll also, a lot of people have immediate bombshell questions right off the bat, so you get those immediate questions answered by talking with the loan officer. And then when you find the house and you need a letter immediately, you're not scrambling on a Saturday at 4 p.m. So those are the terms that you kind of need to know. Now, are you ready to become a homeowner? I mean, there's more to consider than just buying a home. I mean, are you ready to be a homeowner? And, the financial weight of buying a home is very real. And it's the largest personal purchase many will ever make in their lifetime. It is no wonder that many wait until they have an established long-term relationship or marriage to bring savings from both sides to increase their purchase power. It also illustrates the level of commitment you must agree in purchasing, even if that means sacrificing. These sacrifices, in some cases, mean lifestyle changes, a trade-off of benefits. Perhaps an annual vacation to the beaches won't be a thing for a while, or maybe Saturday nights at the bar are postponed for a down payment. I mean, these are all things to consider, and why we say that purchasing is not for everyone, and it requires an emotional consideration. Next slide. So one of the tools that Prime Lending has created this year is to help you with that readiness evaluation is a loan site that's called Loanplicity. So it's www.loanplicity.com. And Loanplicity, if you'll notice there, it says take the assessment. These are not related necessarily to qualifying for a loan. These really talk about more your readiness to be, or to buy a home. Or is your credit in order? Are your documents in order? Prime Lending, like I said, we have this website. Feel free to go there. If it can assist you, it'll provide you an assessment score, and then you can make your own determination if you are ready to move forward. Now, after the thing is, so we're dreaming, we're excited, we're moving down the road. Preparation in becoming a homeowner starts with the establishment of a down payment. And unless you're a financing professional, there's a great confusion over what that means and how to do it. Rumors, myths, and a constant policy changes make it nearly impossible for the average person to stay on top of this information. allow us to clean the muddy waters a little bit. For years, we've heard the magic number in getting a home loan means you must have 20% of what a home will cost you and have that money ready to go. This is both true and misleading. By coming to the table with 20% down, you are ahead of the game and will avoid a mandatory monthly fee called mortgage insurance that Ann will explain in a bit. However, in addition to whatever down payment you select, purchasing will also have additional closing costs that you'll also need to be prepared for. So let's go a little further. Let's do some math. You know, it's been increasingly harder and harder for many of us to save as much as we would like. For perspective, a 20% down payment on a home with a $300,000 value means that you need to come up with $60,000 due at the time you sign the final closing papers at closing. Fortunately, the lending industry has become flexible over the years, particularly since the housing collapse in 2008 to those with lower down payment availability. That said, you want to be prepared with as much money in the bank as possible for your benefit, but having that $60,000 is not the only way. So the entire process of buying a home really starts with the no strings attached free. You should, when you get a mortgage pre-approval or approval letter, they typically are free. So don't feel like you've got to. So lenders have different policies about that, but typically you can get those for free. So many of you think the initial step is to choose the real estate agent, and that would be great. But in today's competitive market, the best approach is to first get approved for your loan first. This step allows you to know what you're considered that you're considered a valuable candidate and to receive a loan along with how much a lender would be willing to provide. It also makes sure that your real estate agent is able to start working to find you a home immediately. More than likely, you will be applying for a mortgage loan online. The process can take anywhere from 15 to 30 minutes or more, depending on what information is top of mind and what you need to look up. And after the application is submitted, you'll get a call from your lender to review. You should shop around and get quotes from multiple lenders to make sure you're getting the best rate and fees. Do some research to see if your lender or their company have any reasons online or any reviews online. But there's no need to have multiple lenders pull your credit. We encourage you to ask a lender of your choice to pull your credit. And once you've got those credit scores, write them down and then use those numbers when requesting estimates from the other lenders. That way, you're not getting multiple inquiries on your credit report, which could negatively affect your credit. Most pre-approvals simply require the information you already have. You will need to provide some basic information on the work history, your job, your bank, any investment accounts, your residency history for 2 years, your personal information, such as your social security number, and information on where you're looking to purchase, such as the zip code of the property. Besides having a better understanding of the price points you can afford, being pre-approved lets your prospective agent and seller know you are serious. Remember, in almost all instances, your agents work on a commission. They do not get paid until you close on the home. While the seller normally pays the commission, not the buyer, and that's not always true in every case, but typically, agents obviously like to work with serious buyers. Also, a seller and their agent will want to know that you'll be able to afford the home and have a mortgage. Otherwise, they might move on to a next potential buyer out of the fear that the deal will fall through. Most importantly, this is just a pre-approval. It does not guarantee you a loan. in almost every case, additional documentation and information will have to be resubmitted for final approval. Also, just because a lender qualifies you for a certain amount, you are not obligated to go that high with your home purchase. You don't want to become house poor, which happens when you too much of your income goes to your home. You want to have enough money to still participate in the things you enjoy and continue to save for the future. As we just found out, no one likes to be stuck at home. Just because you received a pre-approval and filled out a loan application, you do not have to go with that lender. You reserve the right to switch lenders at any time for any reason without having to give them a reason. You are the client. Now, thing is, if you've already paid for the appraisal, you might have to go. Lenders have to pay appraisals. Typically they don't transfer appraisals from one lender to the other. So once you've got that property under contract, and we'll get into more of the details here in a minute, you really don't want to switch lenders. The entire mortgage process, let's see here. Let's go with the next slide. And if you'll scroll down and play this, here's a clip of a little bit about how prime lending does this. And press play.
When it's time to buy your first home, your home loan is just as important as the location, look, and layout you dream about. Before you move in and enjoy the perks of homeownership, you must first apply and get approved for a mortgage. The process isn't difficult, but if you're unprepared or unsure of how it all works, you could experience some surprises along the way. We don't want that. So we're going to cover everything you need to streamline your application process over the next couple of minutes. When it's time for you to apply, you'll need the following documents: pay stubs over the past 30 days, W-2s from the last 2 years, and proof of all financial assets, such as bank statements or investment and retirement accounts. For any other documents, your loan officer will be able to tell you what is required based on your situation. This can be handled in person with a Prime Lending loan officer, but the easiest and quickest way to accomplish it all is through Prime Lending's award-winning digital application process. Our online tool allows you to easily and comfortably apply from your couch, your office, or wherever you and your device are. Even better, everything is processed through Prime Lending's secure online portal. All assets or documents linked or pulled are guaranteed to be transferred safely. And the best part? No copying, no faxing, and no printing. Just a mostly paperwork-free experience. Now, after the application is complete, that doesn't mean it's all over. Even while the approval process is underway, it's important that you do not add any additional lines of credit that could affect your credit score. That means no large purchases that require a loan, like a car, and no applying for a new credit card until after your loan has closed. Also, if you have any gaps in employment, any inconsistencies in your accounts, or name variations, be sure to show any proof explaining what happened. This will help clear up any questions your lender might have. When you're ready to buy a home, applying for a mortgage shouldn't be complex, and it never is with Prime Lending by your side. Contact a Prime Lending loan officer to get started.
Next slide. Okay, so that's a little snippet of the process here at Prime Lending. There are so many different ways to make your loan application to be approved. Let's first kind of, that was fast. So let's do a little recap. Your mortgage process will begin with a pre-approval process, but once you put an offer in on a home, you now choose the loan type with the length of the term. We'll encourage you to be organized and have a wide assortment of documentation at the ready that will showcase that you are worthy of receiving the loan. In the early 2000s, the housing market collapsed largely due to many lenders offering mortgages and preying on those who should not have received a loan. This caused changes, and lenders now double and triple check the documents to ensure that you have a job, that you can afford the loan, and are not a credit risk. They may ask multiple times for various documents. At the very minimum, be prepared to have these. And they are, you need a 30-day, you need a income, 30 days history of income. Most paychecks have year-to-date earnings on them, but you could be asked for up to, depending upon how often you were paid, 1, 2, or 3 pay stubs. You need, in some situations, 2 years W-2s. And if you started a new job, you need to have an offer letter ready to produce and make sure it's signed by you and the company representatives to show its acceptance. And for self-employed borrowers, for those with investment properties that they own, they'll likely need 2 years tax returns. Then when it comes to asset statements, 60 days of bank statements for your checking, savings accounts, and any other liquid accounts. Any large deposits that are equal to a half of one's monthly earnings must be explained, sourced, and documented. What that means is if you got a large deposit in one of those 60 days of bank statements, we need to know where that money came from if it's outside of your employment income. And then the 60 days of if you've got retirement statements or investment statements, either 2 months bank statements on those or a quarterly statement. Now, this is kind of important, especially depending upon what you can use or not. Gift funds are allowed on many of our loan programs. Some of our down payments can be some of the down payment or all of the down payment can come from a gift, but it must be from an acceptable donor, such as a relative, a spouse, or a domestic partner. Gifts from friends are not allowed. But this is 2022. Many lenders are able to do the heavy lifting and obtain these documents for you, just as mentioned in the video prior to. Prime Lending is just one of many lenders now that have the ability to retrieve your loan documents from your paycheck income, your employer or your paycheck provider, your employer, your tax preparer, and your banking institutions securely and safely. And in these cases, you authorize the lender to obtain the documents. If the lender is unable to receive any of these documents, then they'll make a request for what they need. But in this case, you kind of let the lender go get it first, and then you just have to fill in the pieces of what's missing. So that's pretty cool and pretty new to the industry right now. The next step.
Bill, it's Ryan. We have a great question, and normally I wouldn't do this, but having been in the industry myself, everyone has this question. Marty asks, if I have student loan debt, how does that affect my home buying process?
Well, your student loan debt, even if it is in deferment, it does have to be included in your qualifying figures. So we typically will reach out to the servicer of the student loan company. If the payment is not indicated in the liabilities on the credit report, then we would use that payment. But if that payment is zero or it's in deferment, we would reach out to the servicer to determine what that payment is. And as a last resort, they would typically use 1% of the outstanding loan amount, but they're going to include something in the form of a payment in the qualifying for the loan. Does that help?
Thank you, sir.
Okay. So we are now at a point to where we can go, next step. Next slide, please. Okay, so the steps. I'm going to go real quickly here. I've just addressed the basic documentation that's needed for an approval. The loan approval process itself can take place in a variety of ways, as I mentioned, online, over the phone, by mail, or in person. Obtaining the documentation can be achieved in a variety of ways. In person, uploaded to the lender's secure portal, delivered by secure email, or by authorization to allow the lender to obtain the pay stubs, bank statements, and tax returns automatically. In general, you can be approved with or without having a property selected, as long as you have applied and submitted all the necessary documents. Ideally, you should be approved before placing an offer. Once you have an executed sales contract, the lender will review any changes in the terms of the loan, present the loan options to you, the customer, and discuss locking the interest rate. If the property is a condominium, they'll also review the project for lender eligibility. So it's not only just the borrower, it's also the condominium project. They will then order the appraisal and they'll order the appraisal on the property, and that can sometimes take anywhere from a week to 2 weeks, depending upon the loan type and where the property is located. The underwriter, they're the ones who do the final say. They will review the appraisal once it comes in, the contract, and issue a clear to close or issue a list of any remaining items that are needed. And then at that point, it's pretty fast going. We're going to send your loan to closing department. Then we'll close, you'll sign your documents. And once those funds have been transferred to the title company or attorney's office, you will get your keys. So that's in a nutshell, the process. And so I received some common questions, and one of them is, can I buy a home with my partner who is not my spouse? And, lenders are prepared to take loan applications in a variety of ways. Sometimes a couple may be married. They can also buy properties together. They're just being partners. In these cases, we do separate loan applications for each partner to keep the information about credit, income, assets, personal private information private. So they're on the same loan, but the documents go out into separately. And sometimes, though, it's the reverse. If someone, let's say your credit score, one of the partners' credit scores is far lower than the other, and if one person can qualify purchasing the home in just their name, it may be beneficial to do the loan only in one person's name. As long as the borrower with a higher credit score can qualify using only his own income and debts. Yes, the loan can be done in one partner's name. If they are married, both can be on title. If not, the title will only be in the name of the qualifying borrower. And the last thing we want to really cover here are a little bit more information with regards to loan product types. Okay, loan product types. This is that discussion you'll have when you receive the sales contract and you need to figure out what you're going to make some decisions on. So this is a great time to once again share with you those that have a 20% down payment, who do not have a 20% down payment, that they can still get a mortgage and buy a home. Remember, there are conventional loan options for as little as 3% down payment for first-time home buyers. And there are also VA loans. One of the first questions I ask is, are you a veteran? Because one of the great benefits about being an active or retired veteran is you get 100% financing. You don't have to have a down payment. There are also a variety of first-time home buyer incentives, including federal, city, community, nonprofit, and private down payment assistance programs, loans, and grants. So with regards to fixed rate mortgages, which is the most common, this is usually a 30-year or a 15-year. However, we are seeing some 40-year mortgages, which is helping lower some of these monthly payments come about. Very few, but there are some opportunities for those. So we discussed that the rate is a locked rate and it's fixed for the life of the loan, giving you a monthly amount you will need to pay. The only thing that will increase in your payment would be your taxes and your insurance, which most lenders handle for you in the payment of an escrow account. The benefit of having a 30-year loan is your monthly mortgage payments are obviously much less than a condensed version of a 15-year loan term. The benefit of the shorter loan is that you will save on interest over the life of the loan. Interestingly enough, back in 2018, Freddie Mac reported that the 30-year fixed rate loan was the most utilized loan by members of the LGBTQ community. Now, Adjustable rates. These are becoming much more popular right now. These are adjustable rate mortgages are utilized when rates are rising. The premise here is that your rate is locked for an initial period, say 5 years or 7 years. So it's locked, depending on what fixed term that is. And then once that initial term is passed, the rate will begin adjusting either annually or semi-annually. Sometimes those adjustments can be as much as 2%. The important part of how they adjust can go up if rates go higher, but you know what? They can also go down if rates go lower once you've hit the adjusting period. One of the key things about adjustable rate mortgages right now is to think about your mortgage. You're buying your home for the long-term investment and ownership and wealth builder that it is. Your mortgage, really, you want to get your mortgage to get you the house. At a later date, if you don't like the terms of your mortgage, you may decide to get a new mortgage. And the main thing right now is getting a home that fits you for you to be able to afford it to buy your first home in this market. So adjustable rate mortgages can be good, even though they get a little nerve-wracking. If you know you're going to be in the house less than 5 years, then it may be the ticket for you. I mentioned VA loans. VA loans is, if we're active, retired, and former eligible military members or their widowed spouses, allowing qualified to receive a loan, such as with as little as 0 down payment and a reasonable interest rate. The VA recognizes the LGBT community, along with recognizing same-sex and spousal benefits protections since the Supreme Court ruled in favor of same-sex marriage in 2015. And then there's FHA loans. These loans, excuse me, are backed by the FHA, and they don't require large down payments. Not every lender offers the FHA loans, and they are not available in every market. But if you qualify, you may only need as little as 3.5% down payment. These can be a great options if you do not have a sizable down payment, or if your credit is less than stellar. They give a little bit more leeway when there are credit issues involved. You will face PMI fees discussed earlier for the duration of the loan. With that, I will hand this off to Ann to share a little bit more about that mortgage insurance I mentioned. Please feel free to email or call me if I can answer any of the questions for you that we've addressed today.
Great. Thanks, Bill. I hope you can all hear me okay. I also wanted to thank the Alliance for having me on the panel today. Hello, everybody. I'm Ann Ness. I work with Enact Mortgage Insurance, and we've partnered with the Alliance to introduce you to the basics of mortgage insurance and how it can make home ownership more affordable. So Bill talked a little bit about that magic number of 20% down payment and how that can be very hard to attain and save up for. But he also talked about the fact that, just in the past few slides, that you can come up with a lesser down payment. And I'm going to explain a little bit how mortgage insurance plays into that. So you might ask, why mortgage insurance? Well, historically, a lot of emphasis has been placed on saving that 20% down payment. I'm going to show you that's not always the case, and that mortgage insurance can actually help you purchase a home sooner with less money down, and in some cases, only 3 to 5% down payment, depending on your situation. So what is mortgage insurance? Or it's also called MI. We in the industry like to abbreviate and make an acronym for everything. But MI, or mortgage insurance, is an insurance that protects mortgage lenders or investors from a catastrophic financial loss in case of a foreclosure. And if you remember back a ways in the discussion that Bill was alluding to, that we had a housing crisis in early 2000 where there was some predatory lending going on, and a lot of people could not afford their homes. A lot of those homes had mortgage insurance on them, and they basically helped bail out some of the mortgage insurance company help make the lender whole. So statistically speaking, the smaller your down payment is on the house, the more likely the mortgage lender is going to incur risk or a foreclosure. And a foreclosure, and I don't know if all of you are familiar with the term, so I'll explain it a little bit. It's what happens when the borrower cannot make their mortgage payments. And we've tried and exhausted every method as a lender, as a mortgage insurer, to try to help this borrower make their payments. And the lender has to take back the ownership of the property. And then the mortgage company who I work for, we would pay a claim or write a check to the lender to offset the portion of the liability or the outstanding loan balance at the time that the foreclosure occurred. So the lender is kind of made whole again. So you can go to the next slide, Ryan. So now you might ask, naturally, well, who pays for this insurance? Everybody, insurance isn't free. On any low down payment loan, where there's less than 20% down, whether it's an FHA loan or a VA loan or a conventional loan, as Bill had talked about, mortgage insurance is going to be required by the regulator or the government. And the borrower is typically the one who pays for that MI in a lump sum or annually and or monthly included in the mortgage payment itself. I should back up a little bit. I know Bill explained a little bit about conventional loans. It's a mortgage product that's available to borrowers that is not a Veterans Administration loan, nor is it a federal housing or FHA loan. Private mortgage insurance, or PMI, which is kind of a subset of mortgage insurance, and that is required on conventional loans with less than 20% down or less than a 20% equity position on a refinance. Some examples for the cost, if you're wondering, for private mortgage insurance on conventional loans. The premiums can run between like 1/10 to 2.5% to 2.25% of the principal loan balance per year. But the good thing is, at the end of the day, even if you don't have 20% down, once your loan balance reaches 78% of the original value or purchase price, private mortgage insurance will automatically terminate. So you have this loan, you put less than 20% down, you had to have mortgage insurance, it's a conventional loan. When your home appreciates in value over time, you make improvements or the housing market keeps increasing, you're obviously going to be gaining equity. So once you have equity of 12% or more of what you owe or what the original loan balance was, or the original value, original purchase price, that private mortgage insurance is automatically terminated. We're regulated by the government and they say, a mortgage insurance can't continue on loans after that value. That's usually not the case on FHA and VA loans. So when you're looking and shopping mortgage products, keep that in the back of your mind. What are the benefits of mortgage insurance to you? You're paying for it. The most important benefit is that with a lower down payment, you can achieve home ownership a lot sooner, not have to save for years for that 20% down payment. If mortgage insurance products weren't available, you would most likely need to save 20% down for your home. So remember, when you're tempted to focus on the cost of mortgage insurance, that mortgage insurance is a critical component for many borrowers to even have a chance at the dream of home ownership. And one last little disclaimer before I move on, what private mortgage insurance or mortgage insurance is not. Don't confuse it with mortgage life insurance or homeowners insurance, which is homeowners insurance is what you need to protect the property as a homeowner against loss to fire, natural disaster, needing a new roof, something like that. Those are totally different products. And mortgage insurance doesn't cover, once again, the structure, the house itself, or the mortgage balance owed if someone on the loan were to die. Remember, it's strictly an insurance product designed to safeguard the lender or the investor. But it is available to help you get a home with less than 20% down. And that's all I have to say about mortgage insurance today. Thanks for listening. I'm going to throw it over to Juan.
Thanks, Anne. Greatly appreciate it. Let me turn on my camera. Sorry, guys. Hi, everyone, and happy Pride. I'm so happy to be here today. It's a great program that we're able to put together today. I'm so excited to be part of it as part of Century 21. So, choosing a real estate agent. Now, you can work with somebody from our community. If you'd like to, just go to our website, visit the Alliance membership directory. one interesting thing is research from Freddie Mac shows that 21% of LGBTQ plus buyers used an agent they knew to be LGBTQ plus. 44% of those LGBTQ plus allies or LGBTQ plus friendly agents. I believe it's really important to find someone who understands our unique concerns and challenges and dreams of being treated fairly and equally. I know sometimes we have unique needs. I myself do camp comedy drag, and I know when I was looking for a home, I needed to make sure I was finding a place that had a big enough closet that was going to cover or was going to hold all of my wonderful outfits that I would need for my performances. So I am also happy to share that 40% of our Alliance members report that the number of their LGBTQ clients has risen over the most recent years. Okay. So here's a very easy way to find someone that can help you out and use our directory. Just go to the directory, go to realestatealliance.org, and you'll see a green box on the homepage. So type in where you're searching for and click on the search. All of the members associated with that community will appear, and you can click and see our profiles and then reach out to us. Okay. Well, having the right real estate agent can make all of the difference. Not only do they serve as your counselor, their negotiator, they're your sounding board, a lot of times a therapist, your cheerleader. They also have a fiduciary responsibility to represent you in the transaction. And, you know, most of all, they're there to treat you with respect, honesty, and confidentiality. Before choosing your agent, you know, look closely at yourself. Think about what type of people do I work best with? Are you more comfortable working introverts, extroverts, texters? Do you like that personal phone call? Do you want somebody who's going to be a storyteller, somebody who's just very strict, very professional, somebody who's very take charge, or somebody who's likes to take orders? Work style and personality are obviously important. Remember, the agent you choose will become a very important part of your life during this process, and having the right fit is critical. You have to get along with this person and you have to trust them. That's the most important thing. The LGBTQ buyer may want to have an LGBTQ plus agent or ally or somebody who understands all the challenges you may face. This is normal, and you should feel free to bring up any concerns that you have during this whole process. Remember, you're interviewing those agents. Feel free to use a professional directory, again, at www.realestatealliance.org to find a suitable business partner for you. You are interviewing that agent. You are the boss. So, you know, treat it like you're interviewing any other employee. If they are, of course, if you need to determine if they're a good old-fashioned agent, research helps. Talk to your family, talk to your friends, get recommendations. If you're new to an area, talk to some of the locals, find out who some of the top real estate professionals in that area is. And of course, go online, look at reviews. Make sure you're totally comfortable with the person that you're going to be working with. It's going to become a very intimate relationship, sharing a lot of different things. And you want to make sure that you're trusting that person, you feel comfortable with them. Once you narrow it down to a few agents, you should contact them, set up a couple of meetings, not only get to know them better, but make sure that you're able to deliver what you need. Talk to them about the style and what makes it a right fit for you. Learn about how they're going to go about providing you the new listings, keeping you up to date about what's going on with your process. You're going to want to make sure that the proprietary tools that they're working with are, you know, top of the line. Most of the big brokerages, you know, have some very good products out there that are going to help the client stay in touch with their agent. See the new listings on there, century21.com. If you go over there, you know, it's going to help you globally find whatever you're looking for. Great programs available to everybody nowadays. All right. Sorry, lost track. One of the other most important points is even though your commission for your transaction is going to be paid by your seller's agent, it's basically baked into the home price, and the buyer's agent is paid by the seller after the home closes. So your agent fee covers the hours that they're going to be spending, all the time they're going to be putting into it. Basically, realistically, as a buyer, that agent's working for you for free. So, taking advantage of it. Don't wait around feeling weird, asking questions. Ask them whatever you need. You need to go into this purchase feeling the most confident you've ever felt in any deal ever. Okay. So next, the search becomes real. Now that you've had an agent, it's really start to get serious on the type of home that you want. As you begin, the process, you're going to have a lot of fun, and there's going to be some nervous times. Realistically, this is more like stress. You're going to be making a lot of decisions, probably the most decisions in a small amount of time that you've ever done in your life. So to aid you in your home buying process, there are great online resources and databases that'll showcase all the different available properties within your market. They're going to help you see the sales in the area. They're going to let you know average home prices, Zillow, Redfin, Realtors.com, and of course, Century21.com. All of these company websites. Also, go check out the agents' websites. They're a great way to feel out what type of homes are on the market, and they're going to help you find. They're going to help you find the newest one that come on. They're going to send you alerts. So, make sure and utilize every tool available to you. Okay, so next thing, really important. You want to make sure that you have a good, strong checklist. You want to know what it is that you're looking for. You want to know the price range that you can afford. You want to know the location that you're interested in. What type of property are you looking to own? Any plus and minuses of any attributes or amenities that are most important to you in the home. It was touched a little bit earlier, what type of mortgages that you want to have, how much you can afford, and most importantly, what do you want to spend? What do you feel comfortable in spending? One thing to remember is because you are likely to be paying over a 30-year term, that maybe going up and going a little bit higher on your budget, it's not necessarily going to be much more expensive. Like it was mentioned before, you can always refinance these. It's more important, to get into that home, make sure you're comfortable with that price that you're paying at that time, your monthly payment price. Okay, as far as locations, this may be one of the most important decisions that you make. Where do you want to live? Members of the LGBT community are very aware of existing and emerging LGBTQ plus communities. Some of the more well-known ones, Greenwich Village, Boys Town, Chicago, the Castro in San Francisco, the Gayborhood in Philadelphia, most of Palm Springs, Asbury Park, and even Gay Village in Montreal. Here in Denver, we have Capitol Hill. But you might be surprised to know that 44% of renters live in the urban areas. When it comes to home ownership, 72% of the communities live in suburbs or in smaller communities. When you're committing yourself to a permanent location, the community you choose to reside in, matters greatly. Everybody has different features, attributes, different amenities in the neighborhood that they're going to be looking for. So it's important to determine what kind of community best suits your desires. Some of the things to consider are Are you looking for a small town, more intimate feel? Are you looking to live in a larger urban area or something a little bit in between? Just because you're soon to be a homeowner doesn't mean that you can't, that you'll change as a person. So, make sure that your community you choose fits your style. Make sure that it is good with any commutes that you have to make. Make sure that it's close to the shopping or restaurants or whatever amenities fit your particular lifestyle. Family neighborhoods versus single scenes. Do you want a walkable community, something a little more rustic? These are questions only you can answer. And groups like PFLAG can help you get comfortable with different communities. As LGBT plus people, we are always aware that not every community is always the most welcoming. If you are having a family, okay. So members of the LGBT community should do extra research to make sure that you're going to be in a friendly part of town or neighborhood. Freddie Mac shows that 21% of all LGBTQ plus people surveyed did not feel that they live in an LGBTQ plus friendly city or town. Now that number actually grew to 25% when people were talking about their particular neighborhoods. This is really important to do your research carefully. Here. Okay, so do LGBT plus people live here? See, showing the different areas, big cities, suburban, big city, medium cities, rural areas, we're everywhere. So yes, as the data shows, LGBT people live in all types of communities. Now let's explore the different type of homes and how we work towards buying them, especially in this type of seller's market. Okay, multifamily homes. For those who may not make a lot of money or have a lot of money available, purchasing a 2-family is a great option. You can actually go up to a 4-plex with a regular home mortgage. So you live in one unit, you can rent out the other. This rent will help you cover the cost of the mortgage, as you can gain equity and you can have some tax advantages from the property. Of course, talk to your accountant on that to see how that's going to work for you. What are the next ones? Really popular: condos or townhomes. So condominium are a great solution if you're looking for a lower price and less maintenance. You may also find that they are located in centralized locations, closer to public transportation, and areas that have good schools and amenities. Condos can also include common areas and playgrounds, like hallways and recreation rooms. So you're going to be paying that. You're probably going to be part of a homeowners association, and those fees are what are going to cover those maintenance of the common areas that you share with other homeowners. Next is the single family. The single family home is the most traditional sense, a detached dwelling where an owner owns the land that the house sits on. With that comes the upkeep, both inside and outside, so yard work. Freddie Mac reports that that up to 75% of all LGBTQ plus homeowners live in single family homes. Another great option for you, it might be a fixer-upper. It's another way to get into home ownership and make it a little more affordable by purchasing a fixer-upper. So the home may need some cosmetic work, but if you're willing to put in a little bit of sweat equity, and if you can do the work yourself, save yourself a lot of money, and you can get into a home at some really good deals. FHA also offers a great loan program. It's called the 203K program. So it's a loan rehabilitation program. So you can go in and they will loan you the money in order to do a lot of the renovations that are needed to get the home to better condition. Now, some of this, you kind of have to have it reappraised. They're going to ask for some, re-inspections on it. So it's going to be a little bit of a process. If you have a good lender that works with these type of programs, it's going to be a piece of cake. And they're really not hard. If you qualify for FHA, you're more than likely to qualify for the 203K program. But talk to your lenders, they'll walk you through it. Last but not least, we're going to have the new construction. Now, of course, the new instructions, they might be a little more on the expensive side, but of course, we're going to get the most modern of amenities. You can possibly get the home custom laid out to your specifications. You're going to get exactly what you're looking for in a new home purchase. Okay, so now to your list of plus and minuses. This is one of the most critical parts, as I mentioned before, knowing what are your must-haves versus what are your wants. In this type of tight market, there are going to be fewer homes for you to see. So the list needs to be very precise and as tight as possible. You're going to have to make sure that you and your partner, you and your agent, everybody is on the same wavelength. You may not have time to see a lot of homes. Currently, when you're looking at a property, a lot of the sellers are limiting, I've heard that they're limiting showing times to as low as 15 minutes. So you're not going to have a lot of time to go in and look at that property. So it's very important to know what are the particular things you're going to need to have in that home and what to zero in on as soon as you're in that property. Now, do you want a new property? That's great. Again, you're going to be able to go in, you're going to be able to ask the builder to do the different types of finishes. If you want granite countertops, you want a particular color of paint, they're going to be there. They're going to make it the way you want. On a fixer upper, you're going to want to make sure you're knowing, how many bedrooms, do you want a big yard? Go into as much detail as you possibly can when you're putting together these lists. And again, know what is a must-have and know what is a I would like. Do you need to have a chef's kitchen? It would be nice. I don't know if it's a necessity. Is this something that maybe it doesn't have right now, but it's something that you can add later? It's possible. Some of the major things to consider will give you a quick little list. Number of bedrooms, number of bathrooms, your square footage. Are you looking for an open floor plan? Are you looking for a formal dining room? Do you want an eat-in kitchen and an island? Do you want a fireplace for some cozy nights? Hardwood floors, carpeting, a garage, central air conditioning, if that's important to you. I know here in Colorado, got to have our central air. Do you want a big backyard, a deck, a pool, a home office, a quiet street, a finished basement? All of this stuff, you have to make sure that you've already started to consider. Sit down with your agent. If there's some things you can't think of, sometimes they'll give you some ideas of some of the things that might be important. By listing everything possible that matters to you, you're going to be able to know if the home is right for you as soon as you go into it. As you identified home online, make sure you refer to your checklists and you see that if that home's going to meet your needs or not. If it doesn't, just move on. The list also gives you a really good idea of gives your agent a really good idea of what you're looking for. And so when they're pre-looking for homes for you, they're going to be able to weed out ones they know aren't going to meet your needs. A lot of times you're going to go in and on a showing, you're going to see several homes in that day. You're going to see 6, 10 homes during this process, minimum. Make sure you're taking pictures. Make sure you have a notepad and you're writing down all the relevant information for those homes. so that you're not forgetting what you saw and which home had what amenities in it. All right. Well, now we're getting to one of the challenging things, the inventory. There's not as much inventory out there as we would like to see right now. Some people think it's impossible to buy a home right now, and that's not true. You know, Ryan spoke about it in the beginning. It's really important that you have a great agent. They're the ones that are going to help you find a home in this particular market. They know what's coming on the market before it hits the MLS. They're going to act quickly. You know, be prepared to go over that listing price. Cash buyers right now usually have a jump over financed, but check with your lender. There are tons of programs that have come out recently that will make a financed buyer able to make an offer as a cash buyer. So check with your lender, see what kind of programs are available out there for you. Your agent is probably aware of a great lender that can help you out with that. And be patient. You know, it's really easy to walk into that first home and you fall in love and you go and you make an offer. And unfortunately, there's 20 other offers on it right now, and you may not get that one, you know, so, you know, but don't get discouraged. Just hang on. There's going to be something out there for you. All right. When you find the home, this is what's going to happen next. Okay, I'm going to try to take you through the steps from beginning to end. You know, some of this might vary a little bit depending on the type of market that you have, the type of lender that you're going through. Some states might have a little bit different process than others, but let's start with the offer. Okay, it's incredibly exciting to discover a home that you're in love with. And this is only the beginning of the process. The first thing we're going to do is we're going to go in, you're going to meet with your agent. They're going to help you put together the offer. Obviously, this has to be accepted by the seller. The price is a very important part of your offer. You know, consult with your agent, ask them for their opinion on what you should offer for this home to make sure that you're going to be in contention with some of these other offers. Make sure that, as was mentioned before, that you have a pre-qualification, or better yet, you have a pre-approval from your lender for that loan. A seller wants to make sure that you actually have the funds to purchase this home, and they're just not, you know, wasting their time. If you go in totally prepared, you're going to have a much better chance. Your agent's going to draw up all of the paperwork. They're going to begin all the negotiations with the other agent to ensure that your offer gets accepted. This may likely include some contingencies in it that might hold both parties to certain milestones in order to continue. So they might make a contingency that something needs to be fixed in the home before you move forward in it. It might make a contingency about your appraisals, your inspections, all of that. Once the parties have agreed, your agent is going to help you with depositing your funds into your escrow account. This is basically ensuring to the seller that you are actually serious in buying this home. So you're going to have you're going to see earnest money is what a lot of people refer it to. So when you see that, and also note that that earnest money that you're putting down will get credited to you at your closing. So it's not like you're just losing that money. Okay, in states that the attorney is supposed to guide the closings, your attorney will draw up all the formal documents. This is agreed upon, again, by the seller's attorney. Unfortunately, until all the documents are signed, the seller can always accept another or better offer. But once you get to the point where everything's signed, you're good to go. Next up is the inspection. This should be preceded with a seller's disclosure. Now, the seller's disclosure is going to be a legal document where the seller is going to share with you any known problems in the property. They're going to let you know if there was ever any work done on the property. Hopefully they're going to disclose to you if there's any warranties on the property. One of the big things that we get is they ask, was there ever a crime committed in this property? Was there ever a murder in this property? Now, some states do allow it, but I've got to let you know that each state is different. And there are some states where they are not allowed to give out that information. It's stigmatizing the property and they're not allowed to do it. But usually your agent can give you some resources that you can go and do some investigation on your own. So, okay. So your home inspector, when you get a home inspector, their job is to go through and they're going to look at a variety of different things within that home. They're going to look at the roof. They're going to look in the attic. They're going to check for insulation. They're going to check foundation. They're going to check the type of drainage that there is at the house. They're also going to examine the electrical. They're going to examine the plumbing. They're going to look at, make sure everything is up to code. They're going to look at your heating systems, your air conditioning systems. They're going to look for mold. In some states, they check for termites. I mean, they're there to make sure that this home is in, the shape that you want it to be in. I think mentioned before, if there's some small minor things, sometimes if they say that a furnace hasn't been cleaned or certified in a while, a seller might offer you a home warranty, and that home warranty is going to cover a lot of these appliances, and your heating system, your air conditioning system usually has a small copay that you pay for them to come out and either fix or replace those type of appliances. So it's a great thing, and a lot of times that can help settle some negotiations. So unless this process, you find a lot of things wrong and you're just uncomfortable in purchasing this home, and you feel that you want to walk away, your agent is going to go back and they're going to start negotiating again with the seller to see what things that they can have fixed. There are some things that the seller is legally obligated to repair. The buyer can also make some different kind of arrangements stating that they will get a credit in lieu of some of these repairs, or they can reduce the price of the home. Okay, so we're almost there. Now we're getting into getting the loan and the subsequent appraisal. So this is going to make sure that the home is valued fairly. It's also going to make sure that for the lender, if something happens and there's a default on the loan, which hopefully will never happen, that they're going to be able to recoup their losses. But again, so it's a plus for you and it's a plus for the lender. Now, hopefully, as long as nothing happens on the seller side of it, you're going to be at the next step, and that's going to be the closing. So when you're getting to that closing, you got to be prepared. There's going to be some closing costs involved in it. I would also get one of those little, stress things to kind of work out your hands a little bit, because you're probably going to be doing more paperwork than you've ever done in your entire life. But trust me, it's definitely worth it. And it's important to have all that paperwork because you want to make sure all the I's are dotted and T's are crossed, because this is going to be the biggest asset that you're probably ever going to purchase in your life. Okay, finally, closing. The closing process, everything that we just went through in order to get to this stage. So you're going to be securing your mortgage. You're going to get all of the paperwork that is going to put that property into your name. Normally, you're going to be doing your closing at a title or an escrow company, or like we mentioned before, some states do require an attorney be involved in that. this isn't always a speedy process from the beginning to the end. But luckily, with new technologies, new programs that are out, most lenders can usually get you from the day you go under contract to closing in around 30 days, sometimes even less. I would highly recommend that before we go to closing, you and your agent do a final walkthrough on the property and make sure that it's in the same condition that it was promised to you. If you requested appliances be in the home, those appliances are still there. They haven't painted the house pink with purple polka dots, or maybe you would want them to paint it pink and purple polka dots. I'm not sure. I'd be okay with it. And the next thing is you're going to be signing all of your documents. You're going to be turning over the final monies that your lender is saying that you need in order to meet your obligations for your loan down payment. The lender's going to go ahead and send the funding. And eventually this is all going to come down to them giving you all the codes, your warranty paperwork, booklets on the appliances. And the most important and the funnest part is they're going to hand you those keys. So when you do that, now it's time to celebrate, because this is going to be your first day as a home buyer. So congratulations. After all of this work, take a deep breath. You're now a homeowner. So let me get it back to Ryan.
Juan, you got us there. You brought us home. Thank you, buddy. I appreciate that. Folks, thank you so much for sticking with us. I have to thank my incredible colleagues who I was flanked by tonight. Everyone did a fascinating job. I know that we have answered quite a bit of questions, actually. I've been following it in real time. There's been some great Q&A and then some questions in the chat box as well. And just with respect to your time for joining us on a weekday evening, I want to make sure that we're calling out some thanks to the sponsors. As I opened with the beginning of the show, we're not here without the support of the organizations that really back the Alliance. So thank you so much again to our sponsors. Thank you to the folks that support the Alliance. It's been a wonderful program. We hope you got a lot out of it. Thank you so much to Bill and Ann and Juan, and to my support team, David and Pip at the Alliance. Appreciate everyone. If you have any questions, please do feel free to reach out to us directly at info@realestatealliance.org. And I'm going to be following up and personally sending everyone who attended today a copy of our first-time homebuyer guide that actually goes over this entire presentation in detail with full illustrations. So you can expect that to come out a little bit later tonight from me. Thank you again. Take care and have a great evening.